Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Welcome back, folks. Today, zooming in from Pennsylvania, we have Craig Eppler. Craig is a very experienced real estate investor and a fund manager as well. And today we're going to be finding out all about what he's doing in real estate and how he's working with investors. So, Craig, welcome to the show. Great to have you.
Thanks for having me, Dave. I appreciate it.
So as we're recording this, it's the middle of 2026 already. My goodness, time flies.
Hard to believe.
Fun. It does.
Yeah.
What does the portfolio currently consist of? What kind of properties do you have? Where are they located? What's your infamous buy box? Give us a picture.
Sure. So I first started buying real estate back in 2019. So what is that, 7 years at this point?
Mm-hmm.
The vast majority of my portfolio, which consists of 43 doors, is in central Pennsylvania. So York, Harrisburg, Reading are the three areas where I own most of them. I have a couple one-offs here locally, my old primary residence in Malvern, Pennsylvania, and then one in downtown Philadelphia. And I also own a medical office space in South Jersey. So that's a new addition as of 2025.
Congratulations. So
thank you. Yeah,
the residential side of things, are there houses, small multis? What are they?
Sorry, yeah, I should have been more specific. 43 units, 37 parcels, so mostly single and a few small multis out there. I bought them in kind of packs of three, and then 32 of them came in one pack where it was a retiring landlord, and he just wanted to get rid of a big chunk of his portfolio. So, yeah.
So did you have incredibly deep pockets, or did you get a little bit of owner financing on that big one?
So the big one was actually a pretty interesting story. I try, when I buy real estate, at least back then, I tried to put as little capital as I could into these deals. Yeah. So back then, a lot of credit unions would let you get fairly flexible with seller credits. And I'm not sure how much you want me to get into like the numbers here, but I was able to get a substantial seller credit on that I only had to come out of pocket about $100,000 to buy that 32 unit portfolio.
Wow. So when you say seller credit, what does that mean? Seller financing? Like they take
So not seller financing, seller credit as in like cash at closing. So for example, if cash at closing, say for example, that portfolio, you would have needed $500,000 to $600,000 to come down. The seller credit literally is, say you need $600,000. You need a $400,000 seller credit. It brings it down to $200,000 that you would need at closing. And back then, the credit unions, if your property is appraised, obviously at the higher valuation of what you bought it for, you could get away with that. I'm under contract for another 10 units, and I haven't found anyone willing to play ball with those kind of terms 5 years later.
I'm still trying to get my head around what the difference is between a seller credit with the credit union and just a normal mortgage.
So it's not a note. You don't have to pay it back. It's just a credit at closing.
Okay, now I'm even more confused.
So I'll give you some numbers. Maybe
walk me through it like I'm a complete idiot, because I think I'm not getting this. So
So I'll use round numbers here. So we bought this portfolio for $2.7 million.
Okay.
Right, 32 units for $2.7 million, and I negotiated a $425,000 seller credit or seller assist, whatever you want to call it.
So basically, with the seller or with the bank? Like, did you get a discount? You got a discount of $400,000 from the seller that he would take as a credit. Is this what I'm getting? I'm thinking
I would take as a credit instead of a decreased price, because that then allowed me to bring less cash at closing. That was the reason for the credit versus versus lowering the price to like 2.3 million. Right.
So that's what it looks like on paper. The reality is he kind of helped you come up with the down payment by giving you that credit. Am I understanding that right?
Correct. Exactly. I mean, net to him, it was 2.3.
Yeah. Right? That's what you negotiated. Yeah, he got what he wanted, and he helped you not have to bring so much cash to the table.
Exactly.
Now I got it. All right. Thanks for explaining that.
Sorry, I probably wasn't explaining that well, but
no, I just I wasn't getting it. So good. Very, very cool. Well, that's cool. No, I haven't heard it expressed that way before, but it makes perfect sense. Seller credit. Cool. Now you got another 10 unit that you're trying to do that with, but the credit unions no longer want to play ball. Is that?
They can do some, but they're not willing to do that much, right? They're willing to do about 6% is kind of what I found is the max that they do. So still good, but not quite.
Yeah, not quite as good as the good old days.
Exactly.
I hear you.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Okay, cool. So single family homes, now you got the medical facility as well. Why did you kind of decide to peek out of residential and get into commercial?
So that's a partnership. It was my first partnership in real estate. Everything else I own 100% of. And the only reason I would go into an asset class that's like that is because that gentleman that I'm partnering with has an expertise in that asset class and is the one doing all the operations and managing it. So really I was the capital raising partner on that side of it. And then we split it 50-50. So
nice.
It seems a little bit easier, frankly, than these C-class rentals that I have to do a medical office space on a triple net lease.
Especially if the other guy's handling all the operations.
Exactly. 100%.
Yeah, because you get to be the landlord of 43 units or whatever it is right now. That
exactly
has its challenges. Okay, very cool. So you were the capital raiser on this, but your entire portfolio to date has been self-financed. So how did you get into the whole capital raising side of things, and what have you learned from that?
Sure. Yeah, so I actually for that 32 unit deal, I actually raised $150,000 to close that.
Okay.
From a family friend. Back then when rates were at 3.5%, they were willing to take 7%, and they thought that was a great day. So I did raise money for that. And I have a background in asset management. So I used to work for an investment advisory firm here locally. We managed about $1.5 billion of stocks, bonds, mutual funds, private investments, like the whole gamut. So that's where a lot of that came from. I wasn't on the capital raising side there. I was more on the portfolio side. But that plus the real estate gave me an entree into the fund that I launched back in March of 2023.
Okay. So tell me a little bit about your fund and what you've discovered about raising capital for your own deals for your own fund.
What I realized, in short, is that raising capital can be quite difficult. No, it's
hey, no doubt, it's especially these days. So it's a little bit more challenging
for sure.
Yeah.
So I run a private debt fund. We offer our investors a fixed rate of return of 8 to 10%. And on the back end, we're investing in old school cash cow businesses. There is some real estate in there, but the vast majority of it is loans to small to medium sized businesses. We kind of fall below the private credit or private equity realm of those guys are trying to write bigger checks than we are. So our average check size is $400,000 to $800,000. So these businesses are doing $1 to $5 million in earnings. And we're coming in on a first lien position. It has to be asset backed, senior secured. A lot of times these guys are putting up their own houses, inventory, equipment, anything that's a hard asset that I can go and touch and seize if needed. Not that I want to, obviously, but that's what we're doing on the fund side.
Interesting. So that ties in directly to your previous career, right? That's kind of
correct. 100%.
Okay.
Yep.
Without any names or anything, can you give us an example of a borrower that you're working with right now? Sure. Just to paint the picture for me. I'm a visual guy.
Of course, yeah. I'll give you one that we're doing some due diligence on right now, just as an example. It's a HVAC company out of the Bronx, New York. They did $2.5 million last year in earnings, and the old man wants to retire and sell it to the guy that's been working there for 10 years. So that guy needs some capital to infuse, and HVAC doesn't have that many hard assets per se. Right? They have the actual things that they're working on.
They got the truck and they got,
Yeah, exactly. And I don't want to take ownership of a commercial truck in New York City. That's not what I'm looking to do here. So this guy had a paid off $1 million house. up in upstate New York as a second home.
The guy that's going to buy the company or the
Who's
owner?
buying it.
The guy who's buying
Correct. The guy who's buying it. The guy who's buying it. And we're looking to do $400,000 to $500,000 loan there. So I felt comfortable taking a first position on that house because it's fairly low leverage. And if he defaults, then I have a second home up in upstate New York. No, I'm kidding, obviously. But yeah,
you got some solid security. You're not basing it on the business itself. Or a rundown old truck or whatever equipment they got. It's on the guy's
correct.
house.
We're not going to pledge assets against collateral. We're not going to do it against receivables. They had some big contracts in place, and there are lenders that do that. But me personally, I just feel more comfortable having that hard asset, just because it goes back to the real estate side as well, right? If you have the hard asset, like you can only, it is worth something.
Very, very cool. So where are you looking? Where's your fund at right now? How funded is the fund, and how funded do you want the fund to be?
Sure. So we are an evergreen strategy. So we're always open. I'm always raising. I should mention also every quarter we are raising for different projects. So the medical office space that I mentioned, I have as a sidecar for the fund. So I raise money for that. That kind of runs through the fund side. We actually have another medical office space currently under contract. So I'm going to be looking to raise for that as well. So yeah, I'm always raising. We're always open in terms of a asset level. We started back in 2023 and we're almost at like $10 million. So I'm not sure if that's the kind of question you were looking at there, but yeah.
Yeah. And where are you aspiring to get it to, let's say in the next 3 or 4 years?
Sure. So to me, this type of strategy doesn't lend itself to $1 billion fund that like BlackRock manages, right? I think this kind of caps out at 150 tops, million, before I really have to kind of change the infrastructure of kind of how we're operating.
All right.
But obviously still goes in that runway.
And you got lots of runway to go there and in the existing fund. Okay. Now that you've become a capital raiser, you touched on it's not as easy as everybody says it is sometimes, especially these days, a little bit more challenging. What do you find works best for you these days, Craig, for connecting with and finding new investor partners?
Yeah, Dave. So I've tried a bunch of different things. I've tried hiring cold callers. I've tried hiring marketing agencies that do online ads. I've tried a bunch of different things. And what I found works best, to be honest with you, is me kind of going out there in person and talking to people and shaking hands. And at my size, we're very much on that trust factor. I mean, the deal has to make sense, obviously, but it's very much like, can Craig deliver on what he says he's going to do? Right.
They want to see they want to look you in the eye, and they want to shake your hand. They want to know where your office is.
Yeah.
So local folks, right? Yeah.
And I would say half my clients are local and the other half are from all over the country. But yeah, that's what I found has worked best, and people just feel more comfortable and kind of obviously talking to someone. And now I'm starting to get to the point where the referrals are also coming in. Because we've been around 3 years, so people have seen the returns, they've seen that it's working. So that's kind of a secondary source right now as well.
Well, hey, you know what? Hats off to you, because you come from the background where a lot of that stuff was already taken care of for you. You didn't really have to see that side of thing. Now you've jumped in, started your own thing, and have to roll up your sleeves and do everything, right? So yeah, that's
for sure. Yeah,
that's well done.
Thank you. I appreciate that.
So as we're wrapping things up here, Craig, where do you see yourself taking your real estate portfolio over the next few years? What do you want to do with that?
So for me, it's being opportunistic. I don't want to pigeonhole myself into just residential or just the medical office space. Mm-hmm. I think go to where like the deal makes sense. And now I'd say more open to those partnerships. Before I'd say I just want to do residential. I'm going to manage it all myself. I'm going to be the 100% owner. But frankly, it's really nice to partner with the right partner. I'll say that, right? Partner with the right partner, and have them find the deal and do the operations part. And I think two minds are kind of better than one. I mean, I have a partner with these medical office spaces. I think that kind of really complements my skill set. I think it's good to have someone that's not, that doesn't kind of do the same things you do. So I'm not sure if that's the right answer, but for me, it's just finding like the deal that makes sense. I'm also going through a big refinance right now, so this question is very pertinent for me of like, where do I place my capital now, right? Because all my loans are on 5-year resets, and we're coming up on 5 years. So it's time to find new opportunities. So I know that was a long-winded answer, but yeah.
No, it's all good. So as we wrap up, Craig, who are you looking to connect with these days?
Sure. So for me, I sit between the investor and the investment. So right now, I would love people that are interested in passive income, right? People are looking for 8 to 10% fixed rate of return. Start paying month one. If you're looking to do real estate or anything in the private investment world, I'd love to have a conversation and see if our product is a good fit for you.
Sounds good. And if people want to connect and reach out to you, where should they go?
Sure, you can check out my website. We're at eplercapital.com. And if you go to eplercapital.com/consultation, there's a link to my calendar to schedule directly with me.
So that's Eppler, EPPLER capital.com. Craig, thanks very much for being on the show.
Yeah. Thanks, Dave. I appreciate your time.
All right, everybody, take care, and we will see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviewyou.com.